Hi everybody, thanks for joining us for the first livestock market report of 2025. I'm Colter Brown from the Northern Ag Network. Well, if you thought 2024 was a good year in the cattle market, 25 is saying you ain't seen nothing yet. We're talking about new records set in the futures, the fed cattle, the feeders. This market has started strong and it looks like it could move higher yet. Of course, our big story today is going to be the USDA cattle inventory report. Always comes out at the end of January with a lot of information on the future direction of the cattle market. Of course, we'll also get into the futures, the fed cattle, a lot of our local auction markets, so a bunch to cover today. But first, want to give a quick thank you and hear a message from our sponsor, the Wyoming Beef Council. Well, of course, we're going to get things started with the hot off the press cattle inventory report. A lot of details to cover in that one. It provides some information on where we're at from a supply situation, both nationally in the cow herd, but also state-specific information as well. This one a little more hotly anticipated than previous reports because the July cattle inventory report was canceled by USDA due to budgetary constraints. So left us asking a lot of questions and trying to forecast where the cattle industry is sitting. Some of the big numbers we're watching for in this one include the total numbers of beef cows in the U.S. That's, of course, the factory of the U.S. cattle industry. Of course, we're also watching replacement heifers to see if we're starting to retain heifers and expand the herd, and just where the total calf crop sits for 2024. Now, as I'm looking at these reports, I was kind of predicting we'd see national beef cow numbers down about 1% from last year. That's where most analysts were forecasting us to be, somewhere around 28 million head. But as the final numbers came in here, we were a little bit below that, down 400,000 head in beef cow numbers from a year ago, just under 27.9 million head. That's the lowest in more than 6 decades. And since the peak in cow numbers in this cycle in 2019, 4 million head of beef cows have been liquidated out of the herd. Now, total cattle inventory 1% below last year at 86.7 million head. One of the few numbers to increase were the dairy numbers, and they were up just slightly from last year. You can see some of the state-by-state numbers for most of our western states and just major beef cow states. Most of them are continuing to contract, but a few starting to increase. One interesting factor was some slight growth in the Montana cow herd. Montana actually surpassed Kansas to become the number 6 beef cow state. The top 5, of course, remain the same, with Texas at number 1, followed by Oklahoma, Missouri, Nebraska, and South Dakota. The trend is pretty clear that these are the tightest beef cow numbers on record, but the rate of contraction is slowing. So the question really becomes, how fast are we going to grow this cow herd? Now, one of the differences between this cycle and the last one is replacement heifers. I thought we'd see a small increase in replacement heifer inventory. Actually, it came in down less than 1% from last year, about 50,000 head fewer replacement heifers. So that just means we're probably going to have a slower growth in the cow herd. We just don't have the heifers currently in the system like we did a decade ago. Prices, of course, have encouraged selling heifers over the last year rather than retaining, so we're not quite in the position for rampant growth. We probably will significantly retain heifers over the next year, but that'll probably just pull beef production lower and push prices higher. So overall, this is a pretty bullish report for the long-term trajectory of the cattle business. To see prices continuing to tighten, we'll likely see values steady to higher over the next year, especially if beef demand continues like it has and holds steady or maybe even moves higher. So that's going to really help our prices. But of course, the question is, how fast are we going to grow this herd? Two major factors will play in that. Of course, beef demand, but also the weather. Are we going to have a La Nina system enter the country as we get into spring? A lot of long-range weather forecasters are saying that. As we look at the drought monitor, we're dealing with more drought today than we were a year ago at this time. Over half of the U.S. is affected by some level of drought, a lot of it concentrated in the Intermountain West and Northern Plains. So that is concerning right now. Hopefully we can see that moisture come in the spring, as we look at the NOAA long-term weather forecast for the next 3 months, they're forecasting drought conditions to improve in parts of Montana and northern Wyoming, but as we look at eastern Wyoming and into the Dakotas, Nebraska, they're saying drought conditions will continue. So that could be a limiting factor in terms of expanding this cow herd. Of course, so aren't costs a limiting factor, more specifically interest rates. We're dealing with rates that are quite a bit higher than where they were at this time in the last cattle cycle, so that's going to decrease the appetite of producers to use debt to expand the cow herd. Want to definitely dig into the price situation, and we have to talk about the futures. Just unbelievable what we saw out of the cattle futures here over the last month. You know, we finished December with cattle right up against their resistance levels. We had a pretty firm ceiling of 270 in the feeder cattle, about 200 in the live cattle. In early January, we broke through that ceiling, and I thought, okay, we're overbought, this market's gonna work lower. No, we continued to push higher to record levels. Honestly, I lost count of how many times we set new contract highs in the cattle futures over the last month. Very impressive. We saw feeders up $5 to $15 for the month. The biggest gain certainly on the front months. Very similar story in the live cattle. And if you look at how far this market has moved since the beginning of September, feeders up nearly $50, live cattle up about $30. That's almost $400 a head. Now, over this past month, we did see box beef prices kind of level out and become rather range-bound, fluttering between $325 and $333. So not seeing a lot of increase there, which means packers are being forced to pay up for cattle because the cash-fed cattle market behaving very similar to the futures, launching higher and, of course, setting new records there. We saw the live sales 14 to 15 better, average about 210. Dress deals 20 to 23 higher, average there near 330. Of course, you always talk about the cattle on feed reports in these monthly videos, and it's kind of been surprising the last year how high the inventory in feed yards has been. That's due in large part to the fact that we're feeding cattle for longer to heavier weights, and we probably have placed more faster than we normally would just due to regionalized drought. But here in January, a bullish cattle on feed report to start the year. We saw the placements figure forecast at 2% above year-ago levels, came in 3% under last year. A significant factor there, Mexican feeder cattle imports. The U.S. was closed imports from Mexico all through December, and so that likely played a significant role in the lower placement figure. Now, we should mention the U.S. is reopening the border to Mexican feeder cattle, so we'll likely see that happen here in early February. That could be a limiting factor for a lot of the futures, so don't be surprised to see things march lower. Shouldn't have a significant effect, though, on the long-term direction. Now we have to look at our local auction markets because we're talking new records today. I think records were set across the board. You know, one of the first big feeder sales of January is the Northern Livestock Video Diamond Ring Sale. It's a trendsetter, and boy, it sure was this year. Still a lot of yearlings on that sale, and delivery dates go clear out to the spring, but strong prices across the board. Just amazing what we're seeing out of these cattle. And as you look at the local auction markets, boy, we're seeing these 5 and 6 weight steers, $1,900, $2,000 a head. Some of these light 5 weights starting to push close to $4 a pound. Just impressive prices. You know, a lot of these calves are selling 40 to 50 cents better than where we started 2024 at. So this market feels strong, and it's crazy to say that this may not be the top. I can't promise it, but take that cattle inventory report into account, and we'll have a smaller calf crop this year, likely more heifer retentions with a smaller supply of cattle available to go into the feedlots. That bodes pretty well for prices. As we look at the weigh-up cow market, that's following the very seasonal trend, usually bottoms out in the winter before rallying back at the start of the year. We're starting to see those cow prices increase. That will probably continue through the first half of 2025. We just don't have the beef cows to cull and put into the ground beef system, so we'll probably see these values push up maybe near $1.50 by summer here. Definitely seeing that trend continuing. Should mention the replacement heifer sale at Lewistown Livestock there. Saw those replacements selling $18.50 to $22.50. Of course, it's production sale season. We'll see a lot of bull sales here over the next couple of months. Prices have started easily 10 to 20% over last year's levels. Some of the big sales, Churchill cattle averaging $11,628 in Manhattan, sale top at $175,000. At Buffalo Livestock, Redland Angus held their sale averaging $81.45. And in New England, North Dakota, 21 Angus averaged $8,929 on 163 bulls. Those prices moving higher, as are the bred cow prices, and they'll likely continue to increase as we get closer to calving and those cows become worth more money. We're seeing the bred heifers average right at $3,000, the young cows just north of $3,100, solid mouth cows finding an average there kind of $2,400 up to $2,700, even higher in some cases. The short-term cows averaging close to $2,300. We have seen a few below $2,000, but not very many of them. Rounding out with the sheep markets here, prices have continued to increase. They really bottomed out in September, but since then we've seen 30 to 35% increase in the lamb market, so prices still moving in the right direction. 80-pound lambs, a wide range, kind of 210 up to 240. 90-pound lambs, 192 up to 214. Did see some bred ewes selling from 210 to 270 per head there at the Newell Sheep Yards. Well, it hasn't just been a strong start to year for the cattle futures, it's been a record-setting start, and it looks like this could be a good year with tighter supplies of cattle, beef demand that at this point looks like it's going to hold in there. That should be supportive to prices for at least 2025, could go further into the future. All depends on what the weather does and of course the beef demand and larger economic concerns. I will just end the report cautioning that there are more dollars on the line than there ever have been in the cattle business. So risk management becomes critical, whether that's managing for the weather risk, the health risk in these cattle, or the price risk. So where you're comfortable, use those risk management tools, whether it's futures, options, LRP, video sales, forward contracting. We need to protect the profits while they're here in this business and try to make hay while we can. That's going to do it for this month's report. Thanks so much for joining us. For the Northern Ag Network, I'm Colter Brown. Take care.